Hello, you're with us here on BTTV. Let's take a look at markets this afternoon. 61,263 on the Sensex, Nifty at 18,226. Looking solid. Remember, yesterday we saw a pretty decent run up, and today we're seeing steady trade as of now. We've got IT moving, financial services moving. We've got global markets pretty much on trend right now. Let's take a look across the board. Skewed towards the advances at this point of time. Plenty of green across the screen and across various buckets, which we'll run through in just a moment. And overall, I think pretty much a majority of the sectors, let's say, are seeing a green tick. IT, pharma is back in action, and financials are pretty much the buckets where I think the maximum traction is this afternoon. An emphasis, the top mover in the IT index. Strides Pharma is up 3%. And we've got Axis Bank, HDFC Life Insurance is up 4.5% as well in today's sessions. A couple of top movers there, but we'll talk about some more of those in just a moment. We've got Vasant Kamath also joining us with us. Vasant, good afternoon. What are you making of the market trajectory?
It's been an interesting last year. I think 2020 and 2021 had, a secular rally, but last year was filled with volatility, and it was interesting to see how retail investors really responded to that.
So clearly seeing a steady uptick in the new year, Vasant. Financials continue to be in focus. I think that is one given in this market. Are you differentiating between the PSUs, the private names, or some of the other financial plays like the life insurers, housing finance, etc.?
Uh, we don't really, as a platform, we have multiple strategies available on the app, Aabha, different small cases related to different themes in the financial space. Some of them that are actually seeing more popularity are definitely the private bank space, as well as financial conglomerates, the entire houses of say an HDFC, Bajaj, etc. But I think both financials, IT are picking up this year.
Okay, so when you talk about small case, are we looking at the broader markets in particular? I mean, is the name literally alluding to that? And where would you see opportunity in this market?
Sure. So, just to maybe give little context, small case is basically a weighted basket of stocks or ETFs or REITs, and these are all manufactured by registered entities. They could be research analysts, they could be investment advisors, and each small case sort of reflects a different theme, idea, strategy, or objective, right? So, like cap themes to some of the sectors that we just spoke about, or even some of the themes like renewable energy, green energy, private banks, etc. I think there are, a lot of interest is going into some of these strategies, like say factor-based strategies, be it like momentum, low volatility, smart beta, as well as in terms of the specific sectors. I think auto, electric vehicles, as well as say financials are something that retail investors are looking at.
Okay, so can we break that down a little bit, Vasant? Would you be open to sharing with us perhaps specific stock ideas within some of these baskets and the rationale or what makes you attractive on that theme, in particular, the kind of opportunity you see there?
Sure, Abasa. I think can't go too much into specifics because, like I mentioned, we're a platform. We don't really
Yeah.
advise or provide research over here. But I think what's really changed over the last, say, 12 to 18 months, specifically among retail investors, is their interest or tolerance for higher risk, more niche exposures has increased. So, which is where we are seeing, very specific ideas or objectives that earlier used to be, more, which used to be something that, say, the HNIs or the ultra HNIs used to look at.
Sure.
That's where, say, now retail is participating more in those. Multiple examples across the board, but I think that's something that will continue over the next 12 months as well.
Okay, fair enough. I like what you said about a new sort of class of investors that are getting into some of these themes. Tell me, what is an average return expectation then at a time like last year? I mean, even at the beginning of this year, people were still alluding to 20-25% across certain pockets of the market. Given the kind of basket that you're looking at, would you still say 10-15% a safer sort of average is what is better to expect, or are you also looking at perhaps a higher return?
For specific years, I'm not so sure about, but I think like
Hmm.
it's safe to expect something around 12 to 15% from equities in general. That said, like I said, we have a wide gamut of strategies, right? So something like an asset allocation model would give you somewhere between 8 to 10%. Something more focused, concentrated over the long term will give you north of that 15%. But it's basically how you construct your entire portfolio with a mix of these strategies that should give you somewhere between the around the 15% range.
All right, fair enough. I'm also interested on, some of these, some of the themes that perhaps didn't really work. So let's talk about crypto for a moment, and I'm just intrigued. I'd love to get your view on it. The way we've seen the kind of crash coming in the Bitcoin and crypto market, um, has that really put investors off the asset class? Are you still seeing queries or traction, or do you feel it still merits a look, given that everyone's talked about how blockchain is the way of the future and it's not going anywhere? But do you think in the interim, as a trading asset, that perhaps we are going to see a dent?
For sure. I think if you look at, say the volumes on some of the popular or large Indian exchanges, that's come down by a magnitude of like five, right? So I think that's definitely happened. I think there's still people who are looking out for some gains to be made on the trading bit because
Yeah.
it's just been a secular downtrend over the last few quarters, really. But I think, how retail investors, especially Indian investors, and this is from, us speaking to a lot of them, how they look at crypto is most of them started out with investing in crypto, and also at the same time then started diversifying their portfolio to other asset classes, including equities, including alternatives, including fixed income as well. So that has helped. Whoever has done that kind of weather this crash in the crypto markets. For people who had their entire portfolios in crypto, I'm sure it must be tough times. That's where they're looking to basically figure out how they can salvage it, how to tide over this entire storm.
Okay. All right. Fair enough. What else is a retail investor currently looking for, Vasant? Because you've had an interesting journey in the way that you kind of developed small case. Take us through some of the insights you have on the retail investor currently, whether it's the demographic, whether it's the customization, or what you really feel they're looking for, especially as markets have been so volatile of late.
No, sure. I think like what's really changed over the last 3 years for all of us as an industry is that uh, retail investors are taking the digital route to transacting in many of these instruments. That's something that has changed drastically over the last 3 years, to be honest. And I think because of that, there are a lot of interesting opportunities that have come up, right? I think one is definitely indexing. This was something that we thought would actually see, a lot of traction in 2022. It's actually happened that, say, uh, total index-based mutual funds or ETFs have crossed like a 6 lakh crore AUM right now. That's a growth of like 8x over the last 5 years, right? And I think we'll continue seeing that. And a lot of that has to do with how people are actually accessing these products, which is on the digital mediums itself. I think the second thing which is fundamentally changing is India is becoming a nation of investors from a nation of savers, and hence the horizons are much longer than how the average investor used to behave earlier. The risk tolerances are much higher, and that's where, say, because market depths are also growing at the same time, we are seeing a lot of new companies actually come up onto the exchange and be available for secondary market transactions. I think this is just the beginning of a trend where retail investors will continue to have more and more products, more and more assets and exposures in their own portfolios.
Okay, fair enough. Want to get a sense of some of these high beta names that we've also been seeing making a comeback in the market. For example, commodities and metals in particular. Would that be a trade that would be part of the portfolio? Would you stick? I know you mentioned a lot of the other new age themes, but what about something like this?
Not really. That's not something that is covered under the small case construct right now. It's still stocks, ETFs, and REITs. Something that we're looking to add soon. We're looking to expand the set of asset classes. Commodities is not something that has yet come into the retail investors' mindset as much. So we're going with the more vanilla ones, looking at global equities, looking at mutual funds, looking at bonds to basically touch upon in this calendar year.
Okay, so talking about global equities, given the kind of crash that we're seeing on some of those tech names, what's the outlook there?
Definitely, people are more uh, conservative right now compared to what they were doing maybe, say 12 months back this time. But I think it also presents a very interesting opportunity for people who are getting started. I think if you look at, India as a market, 99% of India's individual wealth in equities is all concentrated in our home market, in domestic market. So, and whereas the Indian market is just 2.5% of the global market cap, right? So I think there's a large opportunity there. There's a large part of the Indian investors' portfolio that should be allocated to equities outside the domestic ones, and that's something that we want to do. I think from an understanding perspective, it definitely is easier to the average retail investor just because, we are mostly customers of products or companies that are listed overseas. So we'll be launching something this quarter around that, but we're very, very excited about what it presents for us in terms of an opportunity.
All right, fair enough. So a couple of exciting things coming up on that front as well. The current rate environment, do you expect that to continue to play spoil sport? Because market experts are kind of anticipating things to now steady or smoothen out, really.
I think this, increased rates will continue for some more time, but I don't think that's going to change how retail investors are constructing or crafting their portfolios. I think that's another secular trend that we're seeing where, investors are a lot more educated and literate about asset allocation overall. So they might, skew a little bit towards, say, fixed income. A little bit more of their portfolio might be allocated there, but I don't think it's a binary outcome where because of rates increasing, there'll be an exodus from higher risk assets like equities or any other asset class like that.
All right. Thanks for joining us today, Vasant, and taking us through, all that's looking good to you in the markets and an interesting concept to perhaps consider investing in, especially at a time like this when we're looking for opportunities in the new year and with the continued momentum that we're seeing on the exchange as well. Vasant Kamath joining us there. LIC gaining in trade as we speak on the back of a Kotak Institutional Equities note. The brokerage firm has initiated coverage on the stock with a buy rating, citing growth levers. Kotak expects the company's margins and product pipeline to aid value of new businesses. The only challenge may stem from stiff competition from peers who have a diversified product mix. But overall, Kotak does expect a PNG CAGR of 18% over FY23 to 25, coupled with a 180 basis point jump in margins over the next few quarters. So that's the latest coming in on LIC. All right, let's take a look at some of the other movers in trade today and talk you through some of those. Let's take a look at the broader markets. We've got Bank of Maharashtra back, Mazgaon Dog. These are like the usual suspects that we've been seeing now. UCO Bank, Rajesh Exports, General Insurance, VMart Retail, HDFC Life Insurance, PowerFin has also been moving. All the life insurers are up today, actually. It's a whole host of them. Pharma, diagnostics, healthcare, that entire pack seems to see some amount of action today. We've got financials on the move. That's another area. Then a few others here and there. A lot of, again, like I said, healthcare, Aster DM, Dr. Lalpath, Metropolis, etc. Titan, of course, from the heavyweights. Glenmark again from the healthcare space. So a whole host of those are seeing some amount of action coming in today. After a little while, they were quiet for a while in the middle. But overall, let's just take a look at the setup. 127 points on the Sensex, 61295, close to 61,300 now. Nifty above 18,200. It's been looking strong. And overall, if we take a look at the breakup as well, skewed towards advances, a pretty steady session. Recoup those losses early in the week, and we're on track right now when it comes to momentum and steady uptick. And even in terms of the technicals, I think market experts are predicting that above these levels, then we should kind of see markets start to see an uptick going forward, given that we seem to have bounced back. We're also heading in for earnings and budget, so there's going to be a lot of cues to watch out for. Metals have made a comeback. Financials seem to be consistently in theme. Real estate was up yesterday, of course. Capital goods, infra, cement continues to be a theme. And then, of course, we have a whole host of those agri-commodities that continue to be in focus as well. IT making a little bit of a comeback today, so we'll keep an eye on that one too. While some of those tech stocks have been a little bit mixed. Zomato, for example, taking a U-turn once again. So that really sums up some of the action when it comes to trade today. We'll leave it there for now, but let's see how things continue in the week. Thanks for watching.